Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to another Insights. And I want to apologize right out of the gates for the technology issues that have been popping up. It seems like lately it's been a lot more than normal, and we always have little glitches here and there, but with emails and now Extreme Charts not updating, and it is now functioning for the most part, but you'll see when we get there, there's still some little jumpiness to it. But I wanted to start off with, like we usually do, a little quote, and I thought this was fitting. You can never progress if you're letting things that don't deserve your attention continue to bring you down. I think that is, considering the hurdles that we're having, the challenges. I used to, honestly, probably 8-10 years ago, get extremely frustrated with this type of stuff and get cranky and angry. And the reality is, I learned to be patient, and that, I can only do so much. I can't control those things that are outside of my control. I can't do anything about it. And really, I learned this from trading. It's one of those things where eventually it sinks in with everybody that sticks with trading long enough that you can't control the market. You don't know what's going to happen next. And so you learn to just kind of sit back and let things play out and let them do what they're going to do, realizing that you don't have control over it. And as much as I wish I could control this cough, which I can to a certain degree, you notice I have these little cough things here, but it's close. I can tell that it's almost gone. But as much as I can't control the market, I can't control the technology issues that are popping up either. So I've learned just to kind of shrug it off and not give it any attention. I mean, there's nothing I can do about it except what I can do when the opportunity is there. I can get a hold of people that could maybe fix it, and that's about it. So I don't let it bother me anymore. I've learned to differentiate between what I can control and what I can't. And those things that I recognize that I can't control, I just shrug it off, and I try to find the humor in it. I try to laugh about it. So as frustrating as it is for me too, because I don't like it. I want to be able to get done what I need to get done, and I want to get the insights out to you. And so it is frustrating on one hand. On the other hand, like the quote says, I just don't. It is what it is. So I can apologize till I'm blue in the face, but I don't have any control over it. So with that being said, let's move on. Let's go over and look real quickly and see what has happened with the market. And it's gotten interesting. Monday was big down day at first. And I was really curious to see if it was going to close below 2,000. Looking at the S&P here. And it was below it for quite a while. And it was big down day, and I was really watching to see what was going to happen. By the end of the day, the last hour or two, it had rallied back up. And not only closed above 2,000, but pretty decently above it. Was it 2014 or something? I think it was 2012. 2012. So that long shadow is a little bit bullish. But there's also some parts that you could easily say are bearish too. Not only did we make an intraday low relative to the last time we dipped down here. Last time we dipped down here, we had a low of, 1993, and here we have, 1987, 89? So we did make a new low intraday, even though we didn't stay down there. Notice last time we dropped down here, we rallied up and closed higher. Here we were down, 32 points, I think, on the day? It was still a big down day, even though we had a long lower shadow. And relative, of course, this is Christmas and New Year's volume, so can't pay real close attention to it, but it was a slight increase in volume. And then today we had just a little spinning top, up 4 points, which actually makes it look more bearish. It's almost like we've had a 3-day drop, a little stall out, little relaxed day, going, okay, we've dropped quite a bit. Let's take a break, try to find some equilibrium. And what I think is going to happen next is we're either going to go sideways for a day or two, which, considering unemployment's coming out, we'll probably just sit and go sideways until that happens, I'm guessing. But it very well could break to the downside. I mean, it's possible we go up. The signs are starting to point that we're getting stronger and stronger to the downside. And if we blast through that 2,000 and we crash through it with heavy volume, I think that's a big sign that we're going to head lower, at least for a short term. Several weeks, if not several months, and it could be the beginning of a longer-term downtrend, possibly even a crash. It's all possible. So we got to be prepared for it and have that in mind. Most of the other markets, very similar. NASDAQ gapped up a little this morning. Same look on the Dow. Transports, yeah, small, little spinning tops. Just really small activity today, not much. So now that being said, getting to the big guys, and also I just looked, I was curious. Alcoa comes out next Monday, 6 days from now, on the 11th, which generally speaking, Alcoa starts off the earnings season. So we're coming up on earnings season, which is good and bad. It's good because we get some move, we get some more volatility. The tough part about it is, especially for 2 or 3 week period, a lot of companies come out, so we may find some great patterns, but then earnings kills the opportunity to trade it. So it's a catch-22, but it is what it is in reality. So, all right, looking at the big guys, getting started with them. In fact, that's all we're going to do tonight, and it is evening on Tuesday, and we'll be getting the little guys and the bonus stuff out. The goal is to have it done tomorrow. Should be able to. I'm going to try to do it early in the morning. And just knock it out and get it done, so I'll get that out to you guys as quickly as possible after having to deal with all this junk. So this cough is making me more mad than just about anything, and it's always so irritating. I don't get colds very often. I've probably had 2 in the last 5 to 10 years, and when they do, this little cough just lingers, and once I really focus on it, it'll go away, and I can tell it's almost gone. But until then, we'll just work with it. So that's why I do those. It's funny. I do those quotes more for myself than anybody else, because I'm looking at it going, okay, I need to do this right now. I can't control it completely. I can control that a little bit, but looking at AAP, go back to a longer term picture. You see, it was $200 just. When was the peak at? November. I mean, a couple months ago. It has crashed hard. I think this gap is earnings. Not 100% certain, but I'm guessing it is. So it's tried to bounce over the last few weeks. Had a little bullish engulfing pattern show up yesterday, but then today it didn't follow through. So looking for it to drop off this 153 resistance level. Looking for it to drop this and continue this downward trend, especially if the market takes a dive. Obviously, Apple, even though the market was flat, slightly bullish today, up just a little bit, Apple was down pretty significantly. We had, for Monday yesterday, we had a, what is that? And on the neck. I always struggle with the in the neck, on the neck, and the thrusting. And an on the neck, in the neck, and thrusting, all 3 of them are actually continuation patterns, the candlestick patterns. So if we get to, and I'll do this, and I'm trying to develop the habit of doing this every time. If you remember a piercing pattern, well, we've got a bullish engulfing pattern, which we had, what do we have with AAP? Bullish engulfing pattern Monday, which is there, right? We completely engulfed the previous day. In fact, we completely engulfed 3 previous days, which makes it even stronger, and a decent push in volume. So that's a pretty strong pattern. No follow through today, but it's a pretty strong pattern. Now, a piercing pattern would be where it's an engulfing pattern, but we didn't quite engulf the previous day's candle, but we made it past the halfway mark of the day before. So in this case, about there, maybe a little lower than that. But if we would have crossed, if this candle right here would have crossed that halfway point, that would be a piercing pattern, which is a bullish reversal. It's not as strong as an engulfing pattern for obvious reasons, but it's still a bullish reversal. If we close anywhere below the halfway point, between the halfway point and the close of that candle, it is in the neck. If it closes about or the same spot that it closed the day before, like for example, this candle right here, the big open candle, yesterday's candle, Monday, closed about the same price of Friday's close. That's an in the neck, so they're about the same. And then a thrusting, let's see, you might have to correct me on this, I might be wrong. It's been a long time since I looked at these specific patterns because they don't come up often, but there's on the neck, in the neck, and thrusting. Thrusting is where it doesn't quite get there. In the neck is it's inside the kind of area. On the neck is it's about the same, and then thrusting, it didn't quite get there. So we have an in the neck pattern here. All three of those are continuation patterns. Obviously, the thrusting is the strongest continuation pattern because we made them a least effort, I should say. So what we have here is we've got Friday's down day. Monday, yesterday, it gapped down big time to here, right to the red line there, and then it rallied. So the bears had total control in the morning. This is we're looking at the mental, the emotional side of this particular pattern. It gaps down Monday morning, so bears have complete control. They take it just a little bit lower, but then the bulls come in and rally it pretty hard. In fact, volume was very solid. In fact, we got a Maribosa, we got a shaved head there. So the bulls ran it hard all day long, which is a bullish sign, but they weren't strong enough to get it past the halfway point of the previous day's candle, which means they were actually weak. They had enough strength to fill the gap was about it. And that's all the energy they could muster. Which says to the bears, yeah, the bulls aren't really that excited about it, so let's take this thing down tomorrow. And sure enough, a little gap up in the morning, this morning, and then it sells off all day long. Basically taking back, the bears took back almost everything that the bulls gained yesterday. So what we've got is, and there's the glitch you see that we're dealing with on extreme charts. You see in the horizontal lines jumping. Watch. See them jumping like that? So when I jump from one template, I go to this template. You can see they're not in alignment. If you look to the right, there it just jumped. It did that automatically. I didn't do a thing. I don't know what's going on with this thing. It's weird. I don't think I've ever seen that in the 10, 12 years I've used this program. You watch the numbers like the 117 here on the right. If that line and that number is not in alignment, then the line's not right. See, it's not in alignment, and watch, it'll jump. There, it just jumped. It did that automatically. I didn't touch it. So I don't know what's going on with it. Hopefully they'll have it fixed here soon. But what we've got here with Apple is a big head and shoulders. You know, we had it on the weekly. There's the weekly chart. And we can still see it on the daily. And we've got basically four heads, but there's still the pattern there. We're right at the neckline right now. So I love this. Not only is this my favorite pattern, but it's beautiful right now. The bands are both pointing down. Everything is looking bearish. You got Stokes, MACD both pointing bearish big time. We're right at the neckline. If this thing accelerates tomorrow, we're in good shape. So quite frankly, I'm pretty excited about Apple. This is one I'm looking at possibly buying a longer term option on too. Because when you look at the big picture, you're looking at this thing dropping to 75 is very realistic. And there's a weekly chart. I mean, we could easily go all the way to 50. But just the head and shoulders pattern itself takes us down to about 75. So I am looking at the possibility of a leap on this. Don't do it very often, but I'll most likely, if the trade presents itself, do a short term, but also looking at a longer term as well. Allergen, however it's pronounced. Another little head and shoulders. This one's a little bit smaller. There's a monthly long-term chart. But the pattern's there, so I like the looks of it. Everything about it looks good. Indicators are starting to turn bearish. You see a little divergence on MACD. We've got the 200-day moving average coming in right there, along with the 50. So if it breaks both of those, zoom in a little bit, we're sitting right at the, or no, let's see, the 200 is just below. That's the neckline there. So if we break the neckline, then we're in good shape. We got to watch the 200-day moving average, which is right there. But I like the looks of AGN. BPL, Buckeye Partners. There is the downtrend that we've been in for almost a year now. And there is basically looking for this thing to turn over. We're not quite there as far as the resistance. In fact, if it bounces up a little bit and hits that downtrend line and starts to dance around it, I may move this plan up to there. As of right now, I'm going to leave it where it is. Because if it breaks back down from here, we've already reached up and tried to tap that. So if it breaks down from here and breaks below that 64.80, I'd be pretty comfortable in a bearish move. Kind of like this last one here. We didn't quite get there. It got real close. And then it broke and just went, accelerated quickly to the downside. So that's kind of what I'm looking for here. Delphi. Delphi actually has a head and shoulders going on there as well. In fact, I didn't even draw it, but you can see it. Whoops. But there's the big thing I'm looking at. There's a couple of big things going on here. I don't know if the head and shoulders wasn't as significant as the rest of it, so I just left it out. Zoom this in, you can see divergence with MACD. You can see the higher high. You can see the high here and the high here, significantly higher. I mean, we're talking 3 or 4 points higher on the price, yet lower on MACD. So not extremely significant, but definitely indicative of bearishness. And then we've got the moving average is all turning south. The 20 is about to cross the 50. They're all turning south, really. We're sitting right at the 200-day moving average, and the lower band is starting to push down. The upper band's already trending lower. If this accelerates to the downside, which it looks like it wants to, then we'll be pushing that band pretty good, and good chance we'll have a decent-sized drop there. So the only thing that I'm not thrilled about this with is that it's already dropped a bunch in 5 days. Got 5 dark candles in a row. Not normal to have that and have it continue to fall. So consider a little less risk, maybe. Maybe 3 to 5 contracts instead of 10, depending on whatever your normal is. Just do a smaller position just to cover that risk. That's what I would consider doing. If it may not even present itself, right? And we're talking about practice trading. We always talk about practice trading, right? Paper trading. Dollar Tree. Kind of mixed on this one. We've got, as you can see, the downtrend that is in place. It's not extremely strong. I mean, it's been there since, March of 15. So, 8, 10 months. 1, 2, 3. We're on our 4th hit here. So we're on the 4th hit. Short term, though, we've got some bullish momentum. We've got almost a flagpole there with almost a flag pennant type of pattern showing up. A breakout on Monday. You could say this is a pennant or a flag. It did break out of this little downtrend we've had over the last month or so with some solid volume. And then some solid volume today as well on an upward move, even though we left a shadow up there. So that long shadow adds a little tiny bearishness to it. Not to mention the fact that we're at that downtrend line. And leaving that shadow at the downtrend line is fairly significant. But at the same time, we're fighting the bullish trend and the bullish momentum. So a little bit mixed on this, a little iffy on it because of that. Very mixed signals. So, and you can see here, indicator-wise, it all looks pretty bullish. MACD's turning bullish. Stokes is already bullish. Bands is pushing the bands a little bit. So I'd be a little cautious with Dollar Tree. General Mills. Yeah, I'm sucking on Halls too, so trying to keep this cough at bay. General Mills, we've got that ascending triangle that was looking good a week or two ago. If it broke out to the upside, it never did. It actually failed. And now we are fighting that trend line. So if it breaks that trend line, I'd be pretty bearish on it. And you can see, here's another one where we've got some divergence. It's not significant because the price is about the same. MACD is a tiny bit lower, but it's basically been trending lower as the price has been trying to go higher. And hitting the same highs while MACD is getting lower highs. So, and we've also got the 200-day moving average coming in right there too. So we're gonna keep that in play. HCA. This thing's basically been going sideways here for 2 or 3 months now. And I'm watching it, kind of waiting for it to break down. You see here the bands are pinching, which is no surprise. Anytime you get a consolidation like this, they're going to pinch. We're trying to get above the 50-day, but it's been failing. And the indicators are both starting to look bearish. So if we break that support level at 64.60, which is what I'm looking for, then I'd be pretty comfortable with a move down to the next major level, which is really $58. There's a tiny glitch there you can see at 61.40. But for the most part, got about a 4 or 5 point drop there. Lululemon, one of the very few, maybe the only, no, it's one of 2 bullish candidates here. Northrop, the next one, is also, which turned bullish today. The only problem with Lulu is that, we're looking at that resistance there at 53.20. It went blasted right through yesterday, gapped right through it. And today it pulled back a little bit, which is good. But this will need to pull back a little bit before we get to an entry point. So we'll see. It may pull back, and that's really what I'm looking for is a roll reversal at that old support line. Was it 53.20? Northrop. This is an interesting one because I'm looking at this and this one, we've got this ascending triangle here. I just noticed that it's only the horizontal support and resistance lines that are doing that. The trend lines aren't doing it. This is the one that either was it Wednesday or Thursday? This one was looking good. There was just something about it that looked good, so I jumped on board. I took just a really small position, paper traded, of course. Took a really small position thinking that, okay, if it stays above that line, above that trend line, as long as it doesn't break that and close below it, then, oh, hold on. And honestly, yesterday made me nervous because it gapped right below it. But then it started to come back shortly after the open. We don't very often trade when it gaps like that, looking for it to bounce back. It bounced back up and closed right on the trend line. So I left it. I thought, you know what, I'll take a little more risk. I've got, it's a small position. It's not big. So I didn't have a lot of risk to begin with, which allowed me to just relax and not worry about it. And then today it comes blasting back, and it's like, woo! You always feel good when that happens. You never know if it's going to happen or not. I just decided that I'd take the risk and see what would happen today, and it ended up paying off. Sometimes it doesn't, sometimes it does. But Northrop is one. Let me shrink that down a little bit. Still, this is from last week. Rollover or target of 201.84. So we'll see what happens with it. So, and that is one. Not to get too far off the subject, but Northrop, a lot of the other military defense companies, aerospace type of companies, if well, let's just call a spade a spade. If a Republican gets elected as president, odds are all of those companies, the stocks will most likely jump. If it looks like somebody's going to win, a Republican's going to win, those stocks will probably jump. If a Democrat, or which Hillary's pretty much the guaranteed nominee, if she gets elected, I can see them tanking because she will most likely continue the same thing that Obama has done, which is to basically dismantle the military. I just heard some report today saying that the Air Force is the smallest in size it's been in a long, long time or ever. I don't think ever, but a long, long time. So, those are the types of companies that, and this is where, not necessarily get into politics, but because you're going to believe what you're going to believe. The reality is, though, it's going to have an effect on the market. The election will have a major effect on the overall market. So it is going to matter big time. Because I don't think the market is going to like it much if Hillary gets elected. Because she is a big government spender. She is, which actually could be good for defense if that's the case, if that's what she does, but I don't think she will. So, I mean, those things matter. Elections matter, and they matter to the market, and they matter to the economy. All that stuff does. So we've got to be aware of that and know what may or may not be coming, and pay attention to the news, at least enough to have a decent amount of information, enough to know what's going to affect our trades. Let's put it that way. So sometimes we have to set aside our personal beliefs, regardless of what you believe. How it affects the market is what's important. It's our livelihood, right? So Prudential, I don't think I covered this one yet, did I? Things have been going sideways for 2 years, 2.5 years. I mean, it's up, down, up, down. It's between 75 and 90. And here we are again. It looks like we're headed lower. We've got a pretty significant move over the last week and a half. Indicators are all looking bearish. This, like Advanced Auto Parts, has dropped a bunch in the last 4 or 5 days. So a little skittish about it. Probably consider a little less risk on it if it does continue to break. But sometimes, though, these are the best, where they just barely kind of broke down and they haven't had the big breakdown yet. So sometimes they just go and take off. So we'll see. Royal Caribbean. Another one like Advanced and Prudential. Dropped off quite a bit in the last few days. It's actually sitting just slightly below. There it goes, jumping again. I didn't touch the thing and it's doing that. It's just goofy. 16 cents, which is still doable. But it's sitting right there where we could have a potential continued fall. That's the only thing I worry about, the big drop that it's already had. Will it continue? So keep an eye on that one. And then Stanley, big drop today. Lots of volume, almost double the average. And it already broke through the entry point. Really, again, 108 to 103, 102 and change today in 4 days. So we're already down $5 or $6. Odds are this thing's going to bounce a little bit. One of these 3 or 4 that we've had that look like this is going to bounce a little bit. And if it does, then it may give us an opportunity to get it. Let me jump. There we go. Line's finally jumped there. It's goofy. I don't know what is going on with it. I don't really care. It's annoying and it's irritating, but hopefully it'll be fixed soon. So anyway, so that is it for the big guys this week, at least the weekly ones. And hopefully, I was hoping that this week, after the stuff we had last week and the week before, and I mean, the last month and a half seems like there's been glitches right and left. And then I think it was Thanksgiving. Was it Thanksgiving when I was sick? Or did it go? I don't even remember. Anyway, it seems like 6 to 8 weeks it's been just glitch after glitch after glitch. And I thought, well, it's a new year, it's a new time, we're going to get going again, we're going to be on, everything's going to be cool. And then all of a sudden this thing with extreme charts pops up. So, but it is what it is. Just work with it, deal with it. Such is life. And we'll go on about it. And we're going to continue to trade calm, cool, and collected. And have fun. And hopefully make money. All right? All right, y'all have a great night. We'll talk to you soon. Bye-bye.